Hey again, everyone. It is Sunday morning, August 15th. Don't forget to stop over at perfectstormtrading.com, enter our contest, get yourself a chance to win your copy of the Perfect Storm book and the market timing tools that come both in Excel and in Ninja Trader Indicator package. In today's video, I'm going to continue on with the theme of volume, which we talked about yesterday. I'm going to show two more volume indicators, and these are nothing special. You could easily put these together, take existing volume indicators and modify them or whatever. The first one is just a rolling 4-bar volume total, and we're looking at a chart of Apple weekly here. And what I wanted to illustrate on this chart primarily was that the extremes that you get on the rolling volume chart will often be important pivot or breakout points on the price chart. So as you can see, going back here, when we peaked out in the 4-bar rolling volume here, we actually were at a high point, and then it started a downtrend that lasted for a few weeks. Shallow as it was still an indication that there was going to be some downward pressure. And then when we got to the end of July 18, we turned up here, and that was actually the breakout bar, and that put us into a run that lasted for about a month and a half, about 6 weeks on the 6 bars. Then the next significant pivot came on 111.19, and that was a low. So you can see that the high and low in volume don't necessarily correspond with highs and lows on the chart. Highs in volume could be lows in the price action, or they could work out to be the same. Again, on the next one, 726.19, we had a low in volume, but we were a high on the chart, and that one only went down for the following week before the market turned up again. Then on 12/6/19, we had a low in volume, which was a low in the price action, and that actually was only like a 1 week reaction, and then the bull move resumed. Then we got the huge spike where we ended up trading 7 billion contracts that week, and that ended up being the low on 327.20 after the flash crash of last year. And then when we get to the end here, you can see this peak coincided with this peak in volume, and then for the last several months, or year actually, we're really not making much upside progress on the price here, but we're steadily declining in the rolling volume totals. So again, this is sort of confirming the chart I showed yesterday, where we had a similar pattern on the float indicator, which was pointing to a potential high in Apple here. So I just wanted to bring that out. This is just another way of looking at volume that's kind of confirming that this may be a distribution pattern having gone on here the last year, with this declining volume being indicative of that possibly taking place. One more indicator here. This is up and down short harmonic mean averages of the last X amount of bars. So that has a variable setup in it. I'm using a 5-bar average on this. This is going to show you somewhat similar to the last indicator. What we're getting, we want to look at the two different lengths, and we look at the crossovers, and you can see, like, I have marked some of the crossovers, and what they'll do, they'll give you turning points in the market, and they're not necessarily going to be of the same polarity. Like when this crossover from the lower end of the volume crossed upward, it was actually indicative of a down move in the market coming up over the next few bars. So you can see that this is a leading indicator where you're seeing the crossover become imminent, yet the market hasn't done anything. So you have time to get in and initiate a trade, whether you want to take a reversal bar or wait for a breakout of that small consolidation area. Now here, the next one, we have an instance where we have a low and a up crossover on the volume differential, but that's actually triggering a downward move in the market. So that's giving us 4 weeks plus down there. So this can really help you to set up some good option trades. Same here on the next one. This upward crossover is giving us a downward push in the market for another few weeks again. Then you have these internal crossovers, where the one I didn't mark with the line, this one crosses down, but that's actually happening at this outside bar, weekly outside bar upward close, which puts you into that month and a half bull move. So you can take a look at these lines, look at these crossovers, and see that they can put you into some good trades. Obviously, since we've gotten into this last year and a half here, where we've been in this steady run up, the downward moves haven't given much, but still, this is something that you want to keep your eye on. It's really important to incorporate this type of volume analysis into your trading with your other tools, because oftentimes this type of volume work will really set you up and give you a clear indication of an imminent reversal point or a breakout point. So that's it for today. I just wanted to look at some volume stuff over the weekend, give you guys some more food for thought in a little bit of a different area, something that we don't normally touch on. So every now and then we'll take a look at another mode of technical analysis and see how those tools might be able to help us out. So that's it for today. Thanks for watching. We'll see you again on Monday.